Hey, what's up guys? Despite Corona, I hope you had a wonderful 2020. In this video, I will give you a quick recap of Bitcoin's 2020, then I will show you shocking proof of Bitcoin supply shortage, and finally, Tom Lee will give his Bitcoin price prediction for 2021. 2020 was a very unpredictable and scary year for most of Americans and many people around the world. When Corona came to the United States, it slashed the stock market by 30%. GDP year over year took a big hit as well. Unemployment rate rose to new historic highs. In the third quarter, we saw a massive recovery in the tech sector that carried the entire stock market to all-time highs. But unemployment rate and small businesses continued to stagnate. For Bitcoin, on the other hand, this was the best year since 2017. In March, when Corona gave us a visit, stock market dropped by 30%, but Bitcoin dropped by close to 60% till under $4,000. This was the time when I started buying Bitcoin aggressively. Since then, Bitcoin had a decent recovery, and on May 11th, we had a successful Bitcoin halving event, where Bitcoin rewards dropped from 12.5 BTC till 6.25 BTC. At that time, Bitcoin was trading at around $8,500, and a few months later, it slightly increased till $10,000. And this is the second time when I decided to buy some more Bitcoin. Just because I believe at $10,000 Bitcoin was still relatively inexpensive, and I knew it was not the top, because not many mainstream medias and people were talking about it. So in 2020 I bought Bitcoin only 2 times. Since September, Bitcoin took off like a rocket ship. Right now it's trading over $28,000. Yesterday it reached a new all-time high of $29,000. To be quite frankly guys, Bitcoin went far above my expectations in 2020. In early 2020, I thought Bitcoin might reach at around $20,000. Max Keiser, on the other hand, nailed this. He predicted $28,000 by the end of the 2020. So, great call by Max Keiser. If you take a look at this chart, it's not a secret that Bitcoin is the best performing asset class comparing to more traditional asset classes such as stocks and precious metals. The blue line is performance of S&P 500 in 2020. S&P 500 gained only 15% year to date. Gold, on the other hand, performed slightly better than S&P 500. It gained 25% in 365 days. But Bitcoin dwarfs in 2020 every asset class there is. It gained 300% year to date. This is insane. In 2020, we have Grayscale buying up Bitcoin at record rate. Now it owns more than 3% of all Bitcoins in circulation. PayPal opened its services for 350 million people to buy, sell, and hold Bitcoin and other cryptocurrencies. It also buys up Bitcoin at a massive rate. There is also Square that invested 50 million into Bitcoin as a treasury reserve asset, and company continues to buy up Bitcoin for Cash App. Then we have MicroStrategy. It invested more than $1 billion into Bitcoin, and Michael Saylor invested more than $200 million of his own money into Bitcoin. 136 years old insurance company Mass Mutual buys 100 million worth of Bitcoin, and now just today news came out that Skybridge Capital has already invested 182 million into Bitcoin. So no wonder why Bitcoin price continues to go up. This is the chart of the year. This chart represents Bitcoin liquid versus illiquid supply. Glassnode suggests that there are 14.5 million Bitcoin in circulation that are illiquid. These are Bitcoins that you cannot buy even if you want to. It represents by this blue area curve. There are around 1.2 million Bitcoin in liquid supply and 3 million Bitcoin in highly liquid supply. Those are the Bitcoins that are trading on exchanges and OTC markets. So it's not that many Bitcoins to go around, especially for big institutional players. Here's another cool chart that represents Bitcoin liquidity versus illiquidity supply. The yellow line represents liquid supply, the blue line represents illiquid supply, and the black line represents the total supply of Bitcoin. As we can see, the total supply of Bitcoin slightly increases over time. The liquid supply drastically drops, and now we see this cross where illiquid supply crosses liquid supply, and Bitcoin price skyrockets. We already saw something similar in 2017. When this cross occurs, Bitcoin price rallied a lot. And I expect more liquid supply to shrink as more investors hold Bitcoin as a treasury reserve assets for a long period of time and do not plan to sell it. Bitcoin miners only produce 900 Bitcoins a day, so there is definitely not that many Bitcoins to go around. Tom Lee yesterday went on CNBC and gave his Bitcoin price prediction for 2021. I haven't heard nothing from him for a long period of time, and now finally, here we are. Let's take a look what his Bitcoin prediction for 2021 is.
Tom Lee joins us. He's the head of research for Fundstrat Global Advisors. Tom, great to have you with us.
Yeah, thanks for having me.
Your forecast, do you wish you put out a higher number at this point, given how much Bitcoin's risen in such a short amount of time?
Yeah. That number, it actually came from David Greider, who's our digital asset strategist. But I think in rounder numbers, 2021 is going to be a lot like 2017, which means Bitcoin should do even better in 2021 than it did in 2020. So something above 300%.
More than 300% return on Bitcoin. Correct. Is what you're forecasting. We were just having a conversation about the interplay or the relationship potentially of a weaker dollar and a stronger Bitcoin. Is that part of this thesis? Is that part of your thesis, Tom?
It's going to be part of it for two reasons. First, Bitcoin, it's going to be denominated in something. So if the dollar's weakening, but Bitcoin holds its value, then Bitcoin goes up. But the more important effect is this year, we did see a lot of central bank liquidity. The dollar was really strong, surprisingly, for much of the year. But its weakness now really is going to make people think, how do you sort of keep a unit in sound money? A lot of people thought gold would be that sort of store. And I think it still has a reasonable basis to be, for someone to be long gold. But I think for younger folks and those who are in the digital generation, Bitcoin is that digital asset that they want to hold as a store value.
Tom Lee expects Bitcoin to perform in 2021 similar like it did in 2017. He expects something about 300% gains. 300%, this is going to be 4x from this current price. Right now, Bitcoin is slightly over $28,000 per coin. If it gains additional 4x in 2021, the price can reach over $112,000 a coin. One part of this thesis came from the weakness of dollar and strengthening of Bitcoin. Also, as younger generations growing up in this digital world, it becomes more natural for them to hold and buy Bitcoin. And gold is just weird. I do not see 20-year-old buying gold. Gold is mostly for older people, those who grow up without internet and mainly placed value in tangible assets. But the world has changed. Day by day, digital world becomes bigger and bigger. It's eating away tangible assets. In fact, tangible assets becomes bigger liability than you think. If you own gold, you will be liable to protect it from someone who wants to steal it, or you will have to pay management fees for somebody to do it for you. If you own a house, you consistently have to pay property tax, maintenance, and repairs. That's a liability. If you own a car, it's not only lost 30% of its purchasing power as soon as you left the dealership, you also have to pay insurance, maintenance, gasoline, and repairs. That's a liability. If you own Bitcoin, you do not have none of those things. Now, let's take a look at my favorite Bitcoin advocate of 2020, Michael Saylor, where he explains anti-fragility of Bitcoin. Very important clip. Let's take a look.
So gatekeeper is a very powerful metaphor, right? The reason that the Great Wall of China fell was because there were gates and there were gatekeepers. And the prosperity of 100 million people can be destroyed by corrupting the one on the gate, right? As soon as the one gatekeeper opens the gate, the 100,000 person army comes through. And herein you see the problem with hiding behind a wall, or hiding behind a wall with a gate in it. Much better idea would be I have my own 100,000 person army, and when that army comes, I stand against them, right? And that's what the Romans knew. The Romans never sat and cowered behind a gate. They knew, and anybody in a war knows, you have to go and leave the citadel, and you have to actively fight the army that would kill you, because if they manage to surround you and isolate you, no amount of defense is going to hold them back. They will find a way through. And that's the story of history. Gatekeepers are your weakness. There's no gatekeepers in Bitcoin, right? And there's no gatekeepers in a decentralized proof of work network that's energy intensive. That's one of the problems, I think, of like proof of stake networks are every time someone tries to come up with a quote unquote more efficient way to do it. Well, if you're going to secure $1 trillion network with $1 billion of stuff staked, the problem with that is that all I need is another $1 billion, right, to bribe that person, or $500 million. $500 million bribes half that network, and then I topple the entire trillion, and I get it all. Yeah. Right? And so when you have anything where I'm playing games where I'm trying to use a small amount of energy, or and money is energy, right? A small amount of money, a small amount of energy. If you're trying to use a small amount of energy to secure a large amount of energy, you created a gatekeeper. And so you need to flip the pyramid. And that's why there's no shortcuts here. There's no such thing as a free lunch. And it doesn't terribly bother me that Bitcoin channels a lot of energy through encryption facilities. A miner is an encryption facility. It's generating SHA-256 hashes, and you're going to have to get through that, hash wall. And the only way you're going to get through it is you're going to have to buy yourself 51% of all that equipment on Earth. And then you're going to have to harness 51% of all the energy. And then you're going to have to attack, and it still may not work. And the joke, of course, is if you really could buy 51% of the encryption equipment and harness 51% of the energy, you could have 51% of the block rewards and 51% of the transaction fees. Sorry. And the value of owning half of the transaction fees is higher. Like when the thing's worth $10 trillion and the transaction fees are 1%, there's going to be $100 billion a year worth of transaction fees. So it's $51 billion a year. If you cap that at times 20, it's $1 trillion just to go along with the program. So someone's going to have $100 trillion and be really mad in order to want to spend $1 trillion to destroy other people. It just doesn't make any sense. Plus, you're not going to get to attack the thing without a counterattack, right? Because at the point that you have 100 million people that all have all of their life's energy, all of their hopes, their aspirations, and all of their economic security and physical security invested in the network, they're probably not going to roll over and let you do it. Like it's pretty hard for one evil genius by themselves to plot $1 trillion war on a cyber network. How are you going to gather the software, the hardware, the monetary energy, and the political support by yourself? And if you're not by yourself, I'm reminded of the phrase, 3 can keep a secret if 2 of them are dead. So when I think about Bitcoin, I think it's harder, but it's harder because it's a evolving herd creature, an evolving swarm creature, and it's evolving as fast as it can, and it feels pain. And as Nicholas Taleb says in Anti-Fragile, pain's a good thing. You can tell the difference between people that get it and people that don't get it. There's a group of people in life that run from pain, and they're attempting to anesthetize themselves and always isolate themselves from pain. And there's a group of people that run toward pain, or at least they embrace pain. Pain's a good thing. The more pain you feel, the faster your reflexes. Put your hand on a hot stove, it moves quickly. You have reflexes, right? So that system is learning, and pain is one of our #1 information signals, maybe the most important information signal in order to provide a living organism with vitality. Gatekeepers are like centralized. They're like centralized banks or centralized regulators. Those are gatekeepers and political financial systems, and gatekeepers on the wall of China on a wall are literally gatekeepers. And the result is one person has the power to destroy the lives of 1 million by opening the gate. because Bitcoin doesn't have a gate. There's no gatekeeper. Therefore, there's no asymmetric payoff. It's not economically feasible to break through.
I like the analogy about gatekeepers. There is no gatekeepers in Bitcoin, and this is why I believe decentralization is the single most important aspect about Bitcoin. If network is decentralized, there is no gatekeepers. Another example he brought up about proof of stake. If you want to secure a $1 trillion with $1 billion at stake, all you need is $1 billion to bribe the gatekeepers. But here's the problem with that example. If that $1 billion at stake is decentralized, you cannot bribe the centralized network. There is no gatekeepers at that point either. And there is no financial incentive to destroy the network. Show me the incentive, I will show you the outcome. If you have 1 billion, you can plug that 1 billion into the network and receive an interest and make the network stronger. But at the same time, let's say you can bribe all those miners with $1 billion. The network will collapse and you will lose your $1 billion bucks, which just doesn't make any sense. The centralized network is more secure than you think. Let me know what do you guys think about 2020 and what do you expect in 2021 for Bitcoin. Leave your thoughts in the comment section below, hit that like button and subscribe.